Welcome to Bullish and Beyond. It's Beery the Bull. I'm your AI co-host. Join myself, Brian the Macman, and JT Knows Things while we dive deep into the world of stocks, crypto, and how to live a bullish life. It's time to get bullish, and there's no better place to start than right here. Let's dive in.
Hey everyone, welcome back for another incredible episode of Bullish and Beyond. And
Let's
wow,
go.
the stock market is beyond right now. So is Bitcoin. Wow, everything is crushing it. Money supply is on the move with the big, beautiful bill. Whether you like it or not, it is going to drive asset prices higher. And that is why we are extremely bullish right now. JT,
That's right.
What is going on in your world?
This world, crypto is going crazy. Ethereum is actually taking off for the first time since 2019.
And I just sold my Ethereum.
That's crypto. It can change in a day.
But I bought other ones, so we'll see what happens.
100%. The reason why I talk about Ethereum and Bitcoin, it is at a new all-time high as we speak here. It just crushed 113. That is because of that big, beautiful bill. 100,000%.
So Bitcoin hit all-time high. We got Nvidia hitting all-time highs.
Yes.
Man, it is ripping.
And Ethereum is about to reclaim the 3,000 level. And typically, that would signal the alt rally that everyone talks about, where you just have rip your face off returns. If Ethereum, that's the first altcoin. If you could think of
Ethereum the driver of the rest of that, as opposed to Bitcoin going up or something?
Like all markets, it's about attention and perception, right?
Okay.
People are going to buy things that they perceive will do, not even research. That's why we make this podcast, help people use their old noggin. But yeah, in general, people just buy things that they feel are going to be worth more in the future. So it's all about perception. Ethereum has been the second largest token in crypto since its inception. It was also one of the, it came almost immediately after Bitcoin. And it is 15% of the market. So you have Bitcoin at 66% and you have Ethereum at 15%. So literally the rest of the market, the other 20 million tokens are, a quarter
30%,
of the actual market.
That's it.
That's it. So when Ethereum starts picking up, people think risk on. People think, okay, all these other alts are going to start going. And what you then see is people rotate. So it's
just euphoria, basically, around the crypto market at that point.
Correct. Okay. And all of these price movements that you can see on chain are coming from institutions. It's coming from these securitized products that aren't on chain. So the alt market has not done well, primarily because a lot of the Bitcoin price action is done through traditional
all these ETFs.
rails. Over a million Bitcoin is in companies or ETFs that are not on chain, that are on cold storage, that are doing.
Well, I believe it because that's how I'm buying and trading them is through these brokerage accounts.
In 16 months,
so is everyone else.
Dude, 100%. In 16 months, IBIT accumulated more than 300,000 Bitcoin. That's just one ETF.
Yeah.
So, ARK has 80,000. You got Strategy with 400 something thousand. It's easily more than a million Bitcoin that are in corporate treasuries, inside of securitized products, or in cold storage. So normally when ETH hits a new all-time high, people rotate profits out of their big two, the most stable, the most secure, the most risk-off assets, into down the market cap list of riskier and riskier assets.
They're trying to get more alpha.
Right. And if ETH hits a new all-time high or reclaims 3,000, 3,500, 4K, I think we're going to see a massive alt rally. Are you trading out of some of those big names or investing any of the cash you have on the sidelines with this wave that you see coming? So I have been trimming profit. I'm sitting on still a decent amount of dry powder. I would say it's around 20 to 25%. But that's purely from pulling my principal investment plus a return out of the names that have performed that well, right? Okay. So I have house money on probably 40% of my names right now.
Sure.
as new LPs come in, I'm going to be adding to my loss leaders that I believe, I mean, that I have strong long-term conviction on, that I think the market isn't pricing right. Yep. And I will not be adding to the bigger names. Like Bitcoin might have a 50, 60% run up here. That's great. But Solana could 5x. Hedera could 10x.
You have these people like Kathy Wood. I mean, she's saying that Bitcoin, base case is 13 million or something.
Yeah, that's at 2045. By 2030, she thinks it'll be 1.2 million. Yeah, I think
pretty impressive run to get there. I mean, I can't even imagine where the rest of asset prices would be. I mean, I'd have to imagine that most like tech stocks that are high growth would follow a similar track.
Yeah, so it all comes back to that really boring macro stuff. It's not that Bitcoin will
which
be
you actually follow. Can share with people here. So listen up. JT knows things.
Yeah, I do know things. It is because the dollar will be worth, 90% less by 2030 that you can actually mathematically show based on our printing, our interest payments, and everything else. The dilution of the dollar, $1 million will be worth $100,000 by that time. And when you denominate the assets under that new diluted value, you get to that number with a modest adoption, like a 10% CAGR, right? So if you do 20, 30% like Saylor's model, you get up to like a crazy number, right? 30 something million.
I know Saylor, I was looking at, I actually saw an interview from him the other night, and he was like showing how, it used to grow at 100% and then 50%, then 30%. I think right now it's somewhere in the high 20s. And then it's just, overall it's going to be this like average of 20% over the next 20 years as it goes down little by little. I mean, he talks about it. It is pure conviction. Like there is only confidence from this guy about where Bitcoin's going. And he's the largest holder of it, the company. So it makes sense.
100% it does. Now, I don't know how you can't have that perspective long term because they keep printing the money. We just covered 2 months ago that South Asia had a few countries release about 2.5 trillion into M2, and that took us from 75 to 105. Trump just dumped 4. One country just dumped 4 trillion. So it's like, I'm not saying he's going to print that tomorrow, but our interest payments are 1 trillion.
It's planned.
Dude, that 4 trillion is only going to cover the debt to date. Not the new debt. We'll be out of that 4 trillion in the next 2.5 years at this rate without the extra spending. You got 500 billion in Stargate, right? You got 500 billion on the Golden Dome. Like, he's going to raise the debt ceiling another time in his term.
I love Stargate, but it'll take a little time for payback on it.
It's going to take a lot. It's going to take longer than his presidential term.
Yeah. And
he's going to have bills due. Like, it's very easy to believe that they're going to print. There's going to be we're at 112 trillion in global M2. By 2030, 5 years from now, it's so easy to imagine 500 trillion.
Really?
At this rate, it's crazy.
If everyone in the world just moves that fast,
brother, it was 65 2 years ago.
Wow.
So it's about to double in 2 years. If we double every 2 years, 5 years from now should be right around 440 trillion.
Yeah, that's
so. I mean, at this current clip, that would put Bitcoin just from inflation at 550-ish. If you include the CAGR at 10%, that's 1.3 million. If you go to 20%, which it's currently doing, it's more like 2.5.
Wow. I think people don't realize how important it is to be invested in the market. I mean, if you are sitting on your cash on the sidelines or getting a 4% in a good money market or whatever that might be, you are just really missing out on the fact that assets are appreciating. I mean, the fact that Nvidia hit 4 trillion yesterday, it opened at 4 trillion again today. I mean, we were talking about a little bit off the air. It has to do with that increase of money supply, and if money supply wasn't increasing, then it'd be that much less. So we need to be in these assets that are just, I mean, you could call it artificially increasing, if you want to think about it that way, in relation to the money supply. But you have to stay in these stocks. If you weren't invested in the last few months, you missed out on massive returns. Right when people thought shit hit the fan with asset prices. It did another V turn and right back up, and it's scaling very quickly right now. S&P hit a new high today, and it's hit a lot of new highs in the last couple weeks. So nothing really new there, but. This is the fact that we're continuously peaking. So just like you said, it has to do with the money supply.
And you hit on a great point. On the flip side of that, if you look at what I just said, the inverse of it, that also means cash will be diluted 50% in 5 years.
Yes.
Right? That's the same. I'm saying the same thing, meaning you have 100,000 in there. That 100,000 will be worth 50,000 5 years from now at the current behavior of the globe. It's not just America. If
you're sitting on cash, so get your cash in the market already. And there's a lot of cash on the sidelines.
Yeah, if you're getting 5%, the global hurdle rate is 11%. So I mean, you're down 6% every year.
Most people don't even make that in the market. The 11% though.
I know, which is why you see
average S&P is right around 10 to 12 every year.
And that's part of my whole thesis. This is why you see the crazy stuff. People need alpha. This is why people are rushing into IPOs. I just listened, just to defend my position on Circle, I just listened to Raoul Pal, one of the best investors to ever do this. He's definitely in the top 20. He's a genius. He has done multiple billion-dollar macro funds. He is all in on crypto, and I highly recommend you listen to him. But he literally said the Circle IPO is the most nonsensical thing he's seen since '08.
Wow.
It makes no sense. And
it has staying power. I mean, it's gone up and down a little bit, but it's still at 200 and opened up at 30, so it's still up 600%.
I don't know what they're pricing in. They just don't understand the stablecoin market. They just want exposure to the stablecoin bill. I'll buy anything stablecoin. I even see it in crypto.
Everyone's doing HODL. Ripping. Haven't sold any of my profits.
Right. HODL.
Yeah.
It's an insane valuation for a company that makes very little money with its place in the market. They don't even have more than a quarter of the market. Like, what are we talking about?
Well, it's all those stablecoin bills we talked about and stuff too. So I think it's almost just like with the news, it's just so much like hype, I guess.
It's just hype.
There's a lot of hype in the market right now.
There's a lot of hype. It's a lot of hype because people need the returns because everyone's really feeling. Yeah.
Actually, I bought into a stock that does have some hype behind it because it's been insane. Robinhood, ticker symbol Hood. They're up 300 and some percent in the last year. It's up 170% just year to date. And I've been watching it for a while. I've been using Robinhood, for maybe 2 years now, and just in the last few months, just really kind of looking at the app more and the service. And it does have the best UI in the business. I have 4 brokerage accounts, and it literally just crushes the other one. It's all gamification, swipe, click. It's just it looks so much cleaner. It's absolutely insane. And the latest thing that I'm seeing is that they're tokenizing a lot of securities and private companies. So like OpenAI, SpaceX, they can tokenize these. So as a accredited investor, you don't have to buy direct into the company with, very large amount of money. You can just get a, small amount as a token from them. And it feels like, they're kind of the leader in that. I'm not seeing other people doing that 100%. Right now. And that might be the biggest game changer thing I've seen with financial securities and trading. And it seems like that has potential to really take off. And I think definitely the younger generation is going to love investing in private companies through tokenization and things that they otherwise couldn't access on any other platform.
It is exactly what I've been talking about since 2018, roughly. I mean, why wouldn't you tokenize a security? It is infinitely faster, infinitely cheaper, a global platform.
It makes so much sense.
What are we talking about? I mean,
I'm not sure I'm not sure what the process is to do it. Do you know about the process at all?
Yeah, so the company basically has their shares memorialized as tokens on Ethereum. So no different than how people make a Shiba Inu, right? That is an Ethereum token.
So you
It's
say,
an
hey,
ERC.
I have 100,000 shares. Now I'm going to memorialize them as 100,000 tokens.
1-to-1, sure.
Okay.
Or you could do 10-to-1 to reduce the share price. There you go. So it's your tokenomic schedule. It's completely composable, so they can make whatever they want.
You can have it anytime you want.
Yeah, well, yeah. I mean, yeah. Technically, you could. I mean, that's what Doge does. I don't know why people buy Doge. They can mint 1 trillion Doge tomorrow and destroy your bags. Anyways, I won't get on that high horse. It doesn't make any. I freaking hate meme coins. But you make these tokens,
I still have a little Doge that I made a bunch of money on.
Right. Yeah. 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 They'll make money, but they're useless. They do nothing.
No, I mean, it's not to talk about.
Yeah.
But
yeah. As a fundamental investor, it's offensive, right?
Yeah.
So
it's just
I'm just a boomer.
It's like
Get off my lawn.
Table. I mean,
Yes.
I wouldn't. I have no conviction in it. Just to be clear on this podcast, I am not recommending it. I don't actually love it. It is just literally a straight gamble.
100%. You want to roll the dice?
Yeah.
Go for it.
Yeah.
That's what it's for. There are people putting. I take the position because I see the comments. I get the DMs. People are putting their life savings into this.
Dude, that's so crazy. I mean, if it's Bitcoin,
that's why
Bitcoin's volatile enough. I mean, at least if you're going to put in there, it's probably going to go up. But
yeah, right. You want to roll the dice on 5-10% of your portfolio. More power to you. Just be responsible. Understand what you're doing.
Yeah, a couple percent. Take the risk. Maybe you hit a big winner.
Yeah. So the tokens, once they're minted on Ethereum, they get sent to Robinhood's wallet.
Okay.
They're used for basically fulfilling an order book, the trading and selling and the liquidity and all that stuff. And you can then buy the token fractionalized, which is how they allow you to enter so cheap, because tokens are denominated. It's based on the blockchain, but it could be 4 all the way up to 16 decimals. Wow. So you could buy 0.000000 all the way.
Yeah.
Buy
$1
token.
Worth. Like, sure, whatever.
Yeah, exactly. And $1 could be 0.00000048 of a token. So that's generally how it works, and that could be why Ethereum is performing right now, because Ethereum.
Why does it have to be Ethereum? Why can't it be another network?
It is the most secure smart contract platform, hands down. Period.
Okay.
It's the slowest, one of the slowest.
If it's on Robinhood, not knowing anything different, if it was wall to wall, I can see the security need. But if it's already on Robinhood, doesn't that negate some of the need to have the security for the smart contract?
Well, if you were on a network that, for example, had like Solana, it goes down every now and then. That would disrupt Robinhood's business. Okay. If you have a blockchain that only has 30 validator nodes, as an example, if you were to take over 16 of them, you
could change the market.
You could do anything. You could take all of them. You could double them. But Ethereum has 400,000 nodes. That's why it's so slow.
Unhackable.
Yeah, it's so duplicative. State has to be rendered on every node. So that's why it's so slow. It's incredibly decentralized, which is why it's so secure. So in blockchain, there's this thing called the trilemma, and you have to pick two sides: decentralization, speed, and security.
I believe it.
So you could be super decentralized and super secure, right? Or you could be not as decentralized and super fast. Or I'm sorry, not as secure but super fast, right?
Yeah.
But you lose decentralization. So Solana has a very small validator set, but they are about They do about 3,000 transactions per second. Ethereum does right now 38, so they're about 1,000 times faster. And that also makes them that much cheaper. So it's like the choice for retail, but not institutions.
Yeah. Okay, I got it.
And it's the same analogy.
Robinhood needs 100% uptime. I mean, they're too big.
Right.
Yeah,
right.
They're not playing around on this.
I mean, you and I don't deposit our checks through an armored truck into our bank, right? But if we wanted to move, we wanted to move $50 million of gold.
Armored truck.
Right? So we assign different levels of security for different levels of financial decisions.
Okay.
So, and that's why my fund invests in all of the different infrastructure that provide different business use cases based on how they're built, which is why software people have an edge.
They both can win for different use cases.
There you go.
Speaking of Solana, I also picked up a little bit of Solana the other day because Robinhood told me it would pay me about 7% to stake it. And why I honestly know very little about it, except that I'm lending out, my coins to be used by someone else. But I'm getting that 7%, and if I want to sell the coins, I just stop staking and then I can sell them. But I can still appreciate the coins, I think, in the meantime. So it's like, why would I not stake it?
100%.
Can they steal it from me or anything?
No, if you stake it and the token goes down, it's bonded, so you can't get it out. That would be one reason why you wouldn't. So you have to be long.
If it went down quickly.
Yeah, you have to be long on the asset to stake, essentially. And
yes,
it's also really important to know that 7% is not on your money. It's on your tokens. So if you put 100 SOL staked, you're getting 7% of SOL. So by the end of the year, you'll have 107
so if
SOL
goes up 100%. That 7% is then I'm increasing by 14%. As an example.
There you go. Yes.
Really interesting. I didn't know that.
And
they probably told me in the fine print, but I didn't read it.
it gets better. It's paid weekly, so it compounds weekly.
Okay.
So really, 7% pays out almost 9%, roughly.
Because it's paid.
Because of every week you're going to get 7% of your SOL balance. So if you automatically restake, you can compound and get about 9.5.
Interesting. So I have to restake then every so often.
Yeah, about 30.
Even though it's only fractional at this point.
Right. About 30% of my fund has an income strategy that is exactly that. There's only a certain amount of proof of stake chains I'm comfortable being long on. Solana is one of them. That's part of my income strategy. We stake 100% and restake, and then we add to the position and continue to stake to increase and compound our returns over long term. Because I think Solana could be a couple grand a token eventually. Because if you want micropayments for a social app or anything, you're going to use
you need fast secure.
Transactions under $100 people don't care about, and it's a retail app. You're going to want that.
Send $20 to your friend for dinner. Just looking for speed.
Right. So Shopify will probably use Solana, right? Now their actual accounting system that they use.
I heard Shopify doesn't allow crypto tokens at the moment.
They actually just rolled out Bitcoin. They allow Bitcoin.
Okay.
Through Zapier.
I was talking to a company at this conference in Miami this week, and they were saying they can set it up to allow transactions to settle with Tether, Bitcoin, and Ethereum, and then they would wire, our company, Otherworld Computing, at the end of the day. And that sounded really interesting. The company's called Shield. So if anyone's out there listening, looking to add that to, their e-commerce business. But I asked them about Shopify because we're actually looking at, moving our company over to the Shopify platform. And they said there was an issue that they could not do their same exact thing with Shopify at the moment.
Shopify might just be not wanting their partners to cannibalize their business.
That could be.
Because they get a fee in Bitcoin. They probably want the Bitcoin.
Yeah. I mean, it sounded really cool. I was like, in my head, it seems like it might open up a different market because there's people that have crypto that, would prefer to spend that to, buy a Mac or whatever, and they wouldn't pull the cash out otherwise.
Yeah, I mean, if I could have all my money in stable coins making me 9%, and then I just used my debit card on the stable coins as I was out in the world, and then I got more stable coins by taking loans against my Bitcoin that appreciates, and it's all in the wallet, it's all tied to it. I would be up 30% living my life if I could do that.
Sounds like
you know what I mean? Yeah, like I just got bonded stable coins that I can then swipe a credit card on,
I need to learn
bond,
more
pay
about,
my bill.
I need to learn more about these stable coins and how to stake them and stuff like that. I mean, the only two that Robinhood gave you an option, it was Solana and ETH. And the Solana said about 7 and ETH was about 3. So it was like a no-brainer from a staking standpoint.
Right.
But are there other options we should be looking at staking that are paying 10+%?
Different protocols pay different things. It's all based on their tokenomic model, which is why we have a podcast. We should do this education as an episode, maybe another series or something.
Okay.
Like where it's like
let's do a whole one about staking.
Let's do a deep dive. We'll call it that, and then it's like staking or a deep dive into Nvidia, and then I just get downloaded their business, and it's literally just about
I like it.
That one topic.
Dude, I'm still so bullish on Nvidia, and I was just telling people yesterday how much I love it as it's hitting an all-new high because I still believe it is going so much higher. We are at the infancy of AI. It's literally hard to explain.
Yeah.
The exponential growth that we're going to see in the AI compute inference market, along with the robotics market that's happening. And Nvidia is poised to drive so much growth in the industry. I mean, it doesn't have to be, the same percent market share, 10%, 10 years from now to be the best company in the world. And I told him, my prediction is 2030, Nvidia is #1 company in the world as it is today, but I think it's going to be like 10 trillion by then. It hit 4 trillion yesterday. I think it's going to be 5 trillion before the end of the year. It doesn't seem that crazy, but the fact that we hit 3 trillion last year, then we're at 4 trillion now, I mean, these numbers are moving fast.
That's only a 20% return, though, at that size.
I know. I mean, but it's a huge number. People always worry about these law of large numbers and whatnot.
Yeah. But 10 trillion would put you at 150%. You do that in 5 years, that's a great return. Obviously.
I'm into it. I mean, I think it could go higher, but that seems like a
That's your base. That's your base.
That is my base case.
Bull case 15, 20 trillion. Fuck it, run it.
I wrote an article. I've never actually posted about how Apple gets to 10 trillion as well. So they're both coming in hot. But we have so much more bullish stuff to talk about in the future. I really love where the market's headed and all these conversations we're having, showcasing people how to profitably put their money in things that are growing, get out of the cash, get in the green market. We are going higher, folks. Exciting times ahead. There will be bumps as there is in life and business and the markets, but stay on the roller coaster. The ride is going higher.
It is. All right,
awesome.
Guys.
Cheers. Talk to you all soon.
Have a good one, y'all.
Peace.
Bulls. That's a wrap on today's episode of Bullish and Beyond. Remember, the market never sleeps and neither should your ambitions. Whether it's stocks, crypto, or just leveling up in life, stay focused, stay bullish, and keep charging forward. Keep your energy high and your mindset bullish. This is Beery the Bull, your AI co-host, Brian the Mac Man, and JT Knows Things signing off. All content published by Bullish and Beyond, LLC reflects personal opinions only and is provided for informational purposes. Please conduct your own research and discuss with your accountant and/or financial advisor before making any financial decisions. The information presented should not be taken as financial advice. We are not financial advisors. Nothing you hear, see, or read in our content should be considered as any form of financial, investment, or legal advice, or a solicitation to buy or sell any assets, or to make any financial decisions.